Hello and welcome to today's NinjaTrader ecosystem event with Charles and Gary of Viper Trading Systems. My name is Tiffany and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage. Lastly, if you are new to NinjaTrader, please make sure to sign up for your free NinjaTrader demo with real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can get your free demo account by following the link provided. Before I turn the mic over to Charles, it's important to understand that futures, foreign currencies, and option trading contains substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor recommendation, but simply educational in nature. Thanks again for joining us today. And without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Charles and Gary of Viper Trading. Take it away, Charles.
Hey, hello, good afternoon, good evening, good morning, depending on where you're at in the world. My name is Charles Boyle. I am the co-founder and partner of Viper Trading Systems with my business partner, Gary Donahoe. Gary, you there?
Yes, I am, and welcome everyone.
Howdy ho. All right, here we go. As I said, welcome everybody. All right, good. So as I mentioned, Viper Trading Systems, let me get over to the introduction slide here. This is today's agenda. We're going to first cover a little bit of history about Viper Trading, its founding and what we do. We're going to look at some slides that talk about how to determine what the current trend in the market is. We're going to examine how to identify and trade trend changes. We're going to look at whether you should be taking long or short trades in a market. Of course, most of you know that the markets sometimes too are range bound. We're going to talk about how to trade ranges. And then one of the most important things here is please note that at the end of this, at 3 p.m. Pacific time, we will have a lifetime license drawing. We're calling it an after party after the event. Everybody is invited. And my business partner, Gary, will post a link in the chat box. So make sure you click on that and register. And what it will be a lifetime license of all the software, the live trading room, everything that involves Viper Trading Systems. So it's pretty important that you attend the event afterwards. Let's move on. Gary and I have been in business for a little over 12 years. In fact, I think we were in business incorporated in 2009. So technically, I think we're going on 13 years now. We have traders literally all over the world, throughout Europe and Asia and all over the country that trade with us. Some of them have been with us since our founding 12 years ago. So we're pretty proud of that. What you're going to see on the charts today are our Viper Trading indicators. And we do have a trading strategy. It's called Object Trader. We're not going to focus too much on the OT strategy today. We can show that more in the after party with the license drawing. We do also have a live trading room every morning. That runs for about 2 hours. We started at 6 a.m. Pacific time. The reason we started just before 6 is that we trade crude oil futures. By the way, quick show of hands. How many of you trade futures now? And if you do, what instruments do you like? Just quick show of hands. We're just trying to gauge whether we have any crude oil traders in here. Do you like ES, even ES&P, YM? We have YM in the live room. NASDAQ, of course, NQ, pretty high flyer. We don't show NASDAQ in the room, mainly because it has quite a bit of volatility. But we do show YM, ES, crude oil, and GC, which is the gold futures. I see we got quite a few M2K, NASDAQ, YM, crude oil. Awesome. That's awesome. That's great. Yeah, in the live trading room, we actually make we show our indicators in real time on 4 charts, and we'll actually make live trade calls. And these are calls that we actually trade and take for ourselves, in addition to sharing them in the room with the indicators. We do also have training webinars 3 times a week, Monday evenings, Thursday evenings. So I have one tonight at 5 o'clock Pacific. We do record those every 2 out of 3 Saturday mornings. We do training as well. And inside our member area, we have, I think it's 200 to 300 hours of recorded material going back several years that our traders really like and enjoy. If you go to our website, by the way, which you can do while we're doing this webinar, vipertradingsystems.com, I want to mention there's also a link on that web page, on the home page, that takes you to a webinar page. And we have the latest 12 recorded webinars on that webinar page. So vipertradingsystems.com webinar link. And you're going to really like that. There's about 10 or 12 on there you can download and watch for free. And it's all up to date. We also have this notion of what's called high energy times and high probability trades. That's something, high energy time is sort of dealt like with sort of like a news event where we're expecting increased or heightened volatility. And high probability trades are simply trades that we identify each day that have a likelihood of having good movement throughout the trading session. So that's what those are. All right, I don't see any questions on the agenda. Let me move on. So one of the things we do, this is a crude oil chart. This is a screenshot from a few days ago. Crude oil, as you can see in this particular session, was selling off fairly precipitously. One of the ways you can determine the fact that you're in a downtrend, most of you know, of course, is the old adage that says lower highs and lower lows. And so the way we use our indicators are that you can see that we have this notion of what are called bands. You can see that there's a total of 8 bands, 1, 2, 3, a thick line in the middle called the mid band, 4, 5, 6, 7, 8. And so we also have line 2, this thin red line, and we have this thin green line called line 6. These all feature prominently in our trading system. So how this works is we're what you call retracement traders. We don't trade in a trend, the thrust part of the move. So in the case of the downtrending move, the thrust would be the push downward. Here's an example here of a push down. Here's another example of a push down. And here's another example of a push down. These are called the thrusts in the direction of the trend, which of course is down. Now, how we trade this is we take retracement trades. So as you can see here, after this thrust here to the left, we come up and we roll right off around the midband right here at this dot. That's actually a short trade right there. Short, we come back, we roll off the midband again, 870, 896, our little dot right there. We come back, you get the idea. I'm not going to show every single one of them, but you get the idea. Now, we do have this notion of what's called a deep retracement, or sometimes we'll call it a phantom trade. And what that is basically, as you can see right here, where after this last thrust down in the trend direction here, we get a retracement right up in here to line 6. See how we come deeper than the midband right here? These are still short trades. The trend is still down. And so we short the rollovers when it comes up and hits resistance. So there's another short. There's another example of a short and another short. So we short it all the way down. And we use sometimes the midband, the thick line, also as a trailing stop. So you can use that as a trailing stop. So when it gets when you get in it, you simply trail your stop on down. You exit when it breaks line 2 or the midband on a trail, and then you simply re-enter on a roll off again of line 6. So this is a perfect example of crude oil trading in a downtrend, taking short trades only. Now, one of the things we do also in the live trading room that's extremely helpful for all our traders is that we have what's called a long short line. A long short line is simply as it says, it's short below and long above. In the case of the downtrend here, you can see that the long short line is basically line 6. See that how it remains under line 6? So your long short line in this case is line 6. So in the live room, for instance, in this example here to the right, you can see that line 6 is 77.29. It's located right here. So you might hear in the live trading room a comment like, under 77.29, which is line 6, you are shorting rollovers on crude oil. And so that's how we, in addition to more detailed information, take the shorts and the longs in the case of a trend. All right, I don't see any questions on the downtrend. Let's proceed. Now, another thing that, and this is sort of one of the cruxes of what we wanted to discuss here today, is the notion of dealing with a trend change. So here on this chart, you can see to the left very clearly, we were in an uptrending move. We had a series of higher lows and higher highs. The background is predominantly this sort of green color right here, with the exception of the transition right here. Now, in an uptrend, the opposite of the downtrend is true. So what I mean by that is that your long short line now is line 2. See line 2 down here? This is now your long short line. And so the thrust direction in an uptrend is up. So here's an example of an up push right here. Here's another example of an up push right here. Here is a retracement into line 2. So these two dots represent long trades, long only above line 2. Long trades right here. You can see the second one. I believe this is the E-mini S&P futures, ES. You can see we're at 4,700. This is as of a few days ago. This beautiful long trade here turned out quite nicely. We have another trade type setup that we discussed that I'm not going to have a lot of time to cover. It's called a minimum criteria. A minimum criteria trade would be, if you can see in the case of this long trade where we come up and we have this little sort of snaky looking line here. See this sort of green, sneaky snake kind of looking line? We call that the Viper's stealth line. So what happens in a minimum criteria long trade entry is that you'll see that we pull back underneath the stealth line. See the little green line right here? And we pull under line 6. See this little collection of candles? We would box that in using our OT tool, our strategy, and we would get long here. So there's another example of a long trade. Now let's talk about how trend changes occur. We normally look for what we call an ABC pattern. An ABC pattern is as follows. Notice how you come down here off of this final sort of push up here to 47.09 3/4 on ES. Notice how the background meters, these power meters, turn a mix of green and red at the time. And notice what happens here. We come down, we come all the way down here to line 2, which is a bona fide long trade. However, we get another lower high right here. We roll off of the mid band. This is the B leg. So the A leg is the leg down, A. The B leg is the retracement leg up here with the lower low, lower high, 47.05. And then we roll over and we get the C leg. The C leg then will take out the swing here, right here at not even 0 1/4. You see that? Can everybody see that? So that's how we can tell when we get an ABC pattern on a trend change. Now, the way we trade it is that we wait for retracements, right? So here's a retracement here. So that's a short entry. Notice how we go from a transition of a solid green background color to a transitional color in the background when we go through the ABC pattern here. And then we go into a dark red pattern color background right here. Here's a short entry right here under the midband, another short entry here off the midband, and then a deep retracement phantom off of line 6 right here. So the thing that's really nice, a lot of these are scalp trades, Joe. That's a good question. Yeah, a lot of these are scalp trades. Some of them are runners. Here's an example of over here, this long trade where you get a nice runner, where you come up and you go all the way from 85.50 all the way up here to 04, 04 1/4. That's a nice little almost 20 handle pop, 19 handle pop on SE. That's a good little run right there. Here, this one here from 99 1/4 all the way up to 09 3/4 is a little over 10 handles. That's two good, nice pops right there. In the case of the shorts, though, you're correct. After our ABC pattern and we're looking for shorts, we get a rollover here and we're getting a number of scalps, just scalp trade. You get a little bit of a runner right here. You got about 9 handles in that. And then you had a nice little runner over here too, with a roll off of line 6. So you can see that most of our trading, it works around this notion of the bands. Line 2, mid band, and line 6. In the case of the shorts, you're shorting off of line 6. In the case of the longs, you're buying the mid band and you're buying line 2. So it's pretty straightforward. Out of everything you see here, that's a good question, John. This is but all Pacific time here. I'm located in California, so this is all Pacific time. So you would translate this chart to your local time zone. The other thing is that when Gary shows his charts in the live room, he's in Oklahoma. So he's on Central time. So he's 2 hours ahead. We do have a way to identify the larger swings. We have several indicators that do that. For simplicity's sake, I didn't show all that on these charts. We have a real-time indicator that's really, really good that shows, it's an algorithm we run against the data that shows real-time swings. If you come to the after party, we can show that on those charts. For simplicity's sake, we had to kind of scale these charts back a little bit so they fit on the slides. But if you come to the after party, click on that link to the after party, we will show more detail about the swing levels and how you can trade those. Okay, any final questions on the trend change, how that works and how we trade it? I don't see anything. Let's proceed. Now, here's some examples of an uptrend. Yeah, it's an after party. It's a webinar. We're just calling it an after party, but everybody's invited to it. We're going to do a drawing for a lifetime license on it. Now, here's more detailed information on long trades. Here you can see, once again, this is another crude oil chart. This is trading a couple of days ago. This is the January expiry contract. Yeah, Gary, can we put a link up there to the party, to the after party in the chat box? Yeah, bring your own booze.
Charles, I've been putting links all the time you've been talking. I've been answering the questions for everyone.
Okay.
And I'll get that in there for them. Several questions coming in, like what time frame do we use on these charts? And I explain that also and sending it to everyone.
Oh, you are? Okay, cool. All right. Yeah, well, I see I missed a couple of questions. Yeah, that's a good question. These are 4 range bars. Many, many years ago when we first started, we used to trade a 1 minute bar, 3 minute bar, 5 minute bar, guidance from 15 minutes, guidance from, you get the idea. All right, minute bars. And I'll tell you what, it was just so confusing, and it made it hard to see these swings because sometimes, you know, a 3 minute bar will be 15 ticks. Sometimes a 5 minute bar will be 50 ticks. And it's just, it's really tough trading time-based bars. So several years ago, we got away from that. We trade 4 range bars. So that's what you see right here. That's what you see right here. Yeah, you don't have to be over 21 to be at the after party. We'll take all takers. But now the reason I'm showing these boxes here is that here's another notion of a thrust up here. This is just before 8 o'clock Pacific on this day trading crude oil. We get a nice thrust up. You can see that the background turns a solid green color. Bars are predominantly a blue color. Now, the other thing you can make note of, and this is really helpful, is notice how the mid band and all the bands around it stair step up. Can you see the stair stepping that occurs here? That's some more visual clues that help you identify whether you're in an up or a downtrend. So in an uptrend, we're taking long trades only. Here's an example of sort of a minimum criteria mid-band long using an object trader box right here. Here's another example of a long right here, minimum criteria. You're closing under the stealth line and under line 6, the green line right here, long trade. Here's a case where, excuse me, let me take a sip of tea, stand by. Sorry about that. Now, in some cases, you can see here that the price action will take the bars underneath the mid band, which is still a bona fide long trade right in here. See how we come underneath the mid band? And once again, we like using the object trader box. And the way we use that is we engulf it with a rectangular box, hence the name object trader. And then when you get a close outside the box, as you did, you can't see this candle right here, but it closes outside the box. A market order is fired to fill on however many contracts you have. Now, the way we recommend trading is that you go with at least 2 contracts if your account can afford it. Now, the reason we do that is that you want to get a scalp off. In this example here, you would be filled long on the close of this bar right here, a 2 lot long, yes? And then you would take scalp coin, what we call scalp trade at 10 ticks. So it's up here at 10 ticks, you would take a scalp trade off, and then you would engage a trail for a runner. Your initial stop would be located below the box, right here, 2 ticks below the box is your 2 lot initial stop. Then in the Object Trader tool, it's OCO, one cancels the other. What would happen is when the scalp comes off here, then automatically it takes the 2 stop, takes it down to 1, and then takes the trail to within 2 ticks of your entry right here. That's a standard operating procedure for trades. Standard operating procedure. We engage the trail afterwards. We use a combination of line. In the case of the long line 6 and stealth, you can see here, you would trail up just behind it, trail up behind it, long here, trail up behind it, and then it would take you out somewhere up here. On my example, long right here under the mid band. So 2 lot minimum, scalp at 10 ticks, OCO, take the second stop to 2 ticks behind the entry, and then trail up accordingly until you're taken out, and then look for re-entry. The box is not always the same size, Joe. That's a good question. We recommend, we have webinars that go into detail on how and where to draw the OT box. Generally, it's going to be somewhere around 5 to 6 ticks. So with a 4-range bar, you're going to normally engulf 1 to 2 bars, as I show right here. Each of these boxes are engulfing 1 to 2 bars. And when you get a close outside of it, we have come to believe and understand that that shows the resumption of the momentum in the upward move of the uptrend. So what can happen here is that if you have the Object Trader box and you engage it for long only, if you have a situation where the bars close below it and it goes deeper down here into line 2, you are not short. What you do is you simply reposition the box down here to line 2 to allow it to take the long from here. That's the same in all these trades. If the bars go deeper, you're not taking short, because above line 2, you're taking longs only. Remember? Longs only above line 2 in the case of the uptrend. Well, we have, as I said, due to time constraints, I can't get into too much more detail about the box trading. I'll tell you what we can do is in our little webinar after party, we'll get into much more detail and show exactly how and where these boxes are drawn and answer your questions as far as the box assembly goes. We do teach that in the webinars, Gary pointing out, as well as in our training, our live trading room. We use the trading room as both an instructional room to show trades in real time with boxes. Gary's very good about showing support and resistance lines. You can't see them on here, but we would have support and resistance lines at all these different levels, showing where support and resistance are. And we'll explain that more in the upcoming after party today at 3 o'clock Pacific. All right, let me proceed on to the next slide. Stand by. Now, quick show of hands. How many of you like trading ranges? How many of you are just range-bound traders? Tasty. Give me a big old tasty old range and I'll trade that all day long. How many of you, show of hands, can't stand ranges? You get beat up, you get long, it whacks you, you get short, it whacks you even worse. You're flipping around, you're getting in, it's taking you out. Oh man, it looks like, oh Jesus, not heading up, it's heading back down. Darn it. Some of you like it, some of you hate them, huh? Ranges of the land of milk and honey, says John. Well, I don't know that everybody subscribes to that. But one thing that we do here, and you know what? This is a chart of gold in a range. You can see here by the prices. This is gold from several days ago. We were still trading the December contract when I screenshot this. Of course, we're now on, I believe, the February expiry contract. But you know, each instrument when you trade a range is very different. One of the instruments that's really good to trade in ranges, as you know, is the E-mini S&P futures, ES. That is just, if any instrument respects support and resistance, that would be one of the better ones. In this case here, you can see that with support established on here in the 1864 area, you're getting long off of support. So you're taking long trades off of support. And we have a rule of thumb. Our rule of thumb is that the market has to be at least 25 to 30 ticks in size. So you take this 1864 and you add 25 to 30 ticks, and it takes you right up here to 1870. And you can see that this is considered a tradable range. Now, the way that we prefer to do it is that if you're coming off of an uptrend as you were over here to the left. You can see that to the left here, we had a solid green background, stair-stepping midband, and predominantly blue bars. So in the case of coming off of an uptrend into a range, what we will do is trade the long side only. We don't short the tops of the range in an uptrend. And the reason for that is that you can see over here to the right over here on this last long trade off of 1864.30, the last long entry off of support. So we would put in the, as an example in the room, we would put a line right here at support, and we would call long trades off of the 1864 support area. Now, the reason for that is that when you come off of an uptrend and you go into a range, we are expecting trend continuation. In other words, we're expecting this market to continue higher and to take resistance out at the 1871 level and continue much higher. And so the result, if you were shorting the top, now you might say, well, Charles, can I just short the top? Well, you can. But the problem is that when you do that and you trade both sides, that when the market resolves itself, in this case to the upside, you will take a loss on that final short trade. And we, generally speaking, don't want to do that. We don't want to do that. We're going to trade in the direction of the trend and the range. In this case would be long only from 1864 support right down in here. All right. Any questions on range bound trading? Questions? All right. I don't see any. Let's proceed. All right. This is the time for the lifetime license drawing. That's what I had to show here today. Please make sure you click on the registry link right here. Everybody who attends is eligible. The lifetime license is a very valuable tool for everybody you can use. It will include all of our indicators, all the training, and membership, lifetime membership to the membership site where you log in. I can't show that right here because I can only show the slides. But if you go to vipertradingsystems.com, you can see that we have a member area where you can log in, and we have all our links inside of the member area as well. All right. Any final questions? Final questions before we wrap.
Charles, I want to just mention just real quick.
Sure, go ahead,
questions came in. I did go over every question I saw. You guys and gals are quick, but I'm a quick typer, so I answered every question I saw. If anybody has a final one, please type it in. And be sure, if you sign up for that link on that after party that we're having, that is a really, really good deal for the person that wins that, because we're talking about lifetime license of everything that we've developed. And I think you'll be very impressed with it. Also, I did notice, Charles, that the webinar is an hour and 15 minutes from now.
Yeah.
Okay.
So 3 o'clock Pacific, 5 Central, 6 Eastern.
The question from Joe, is it for NT7 or NT8? Well, we're actually right now, we take care of both of those. We have NT7 and NT8. So you could actually have them both even.
Yeah, our indicators and tools all work on both NT7 and NT8. They have for quite some time. We have a mix of traders that like both. Most of them are on NT8, but there's still some scragglers left on 7. And so that's why we make sure we take care of both. All right. I think that might be it. Thanks for coming, everybody. Cynthia, thank you, everybody. Tiffany, I think we might have a wrap here. Did you have anything else you'd like to add for the team?
I'll just do a quick outro when you're finished. Are you all set with all your questions?
I think so. Happy holidays, everybody. Yeah, we got holidays coming up here in a few days. So happy holidays.
Hey, just real quick before we leave, when you come to the after party, we're going to have a drawing for one other thing, and it's going to be a surprise. So be sure and come to the event in an hour and 15 minutes, and we'll show you some other things.
Oh, that's awesome. That sounds good.
Awesome. Well, thanks again, Charles and Gary, for taking the time to share with us today. If you enjoyed today's session, we hope you'll join us for future webinars. We would like to remind you the information provided in this was of Viper Trading Systems and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem. And again, thank you so much, Charles and Gary, and happy holidays.
And just a real quick heads up, That link was actually wrong. Somebody typed in on that. The link is for the 16th, which is today, and it starts in 1 hour and 14 minutes. So if
Sounds
you
good.
register for that, you will be there. Thanks, everyone.
That's awesome. We'll see you all there.
Fantastic. Thank you, everybody. Enjoy your day. I'm going to leave the room open for a little bit longer so you can get that link, so you can join Charles and Gary in their event in about 1 hour and 15 minutes. I'll leave the room open for just a couple more minutes.
All right. Thanks, Tiffany.
I'll go ahead and post that link one more time here.
Okay. Sounds good. Any final questions anybody wants to ask of the team? We can take a few more questions if you want and go back on the slides if you had questions on current trend, how we determine that. Trend changes, of course, the ABC pattern we look for, pretty straightforward. Our system is really not that complicated. It really involves 3 lines. You got line 2, the mid band, and line 6, both when you're trading the short side and the long side. Of course, the long side, you're taking long, in the case of the uptrend, long trades only. And then in the case of the downtrend, you're taking, short trades.
Okay, and Charles, just a real quick for everyone. If you go to our website at vipertradingsystems.com, I put that in the link several times, but vipertradingsystems.com, we've got a contact link also, and that's got an email address, it's got a Skype address, and it's also got a phone number right to the support desk. So you can always get in touch with us. We're happy to help you. And
You do have a free trial too, Gary. Should we mention a free trial?
I did mention that in the deal, but yeah, on our homepage, if you've not had our trial before, or even if you have, just go ahead and sign up on our homepage. There's a link. You don't have to put in any credit card information or anything like that. It's just simply your email address so we can keep in touch with you, and you'll get to use the same scripts we use.
Yeah, it's pretty awesome. The scripts are awesome. We get really a lot of good feedback from all our traders. The simplicity of the system. You don't have to look at 14 different indicators to make a decision on whether you're going to take a long or a short. You know where the swings are. They're all identified. When you come in the live room, we help see the trades. We take the trades with you. We actually say, I'm long from here. I'm short from here. I'm in this trade. I'm not. If we're not in it, we'll say I'm not in this trade. And it's very transparent and very straightforward.
Yeah, and it'll be up to the individual if they want to take it. Moshe asked, is this exclusively for futures and Forex? Well, basically, Moshe, it is, because we trade the futures markets. You'll see in our room, you'll see an ES chart, you'll see a YM chart, you'll see a gold chart, and you'll see an oil chart. And that's what we will actually diagnose and call the trades on.
Yeah, I mean, I've seen some traders use this on stock charts and other charts, and the indicators will work, and you can trade it very similar to what you see, but it's primarily designed for futures and Forex. Yes. Much of the trading is based on the thick line in the middle called the mid band, yeah, or the center line, Moshe. Yeah, a lot of the trading is based on that, and we like the bands because it gives financial markets are unstructured markets. They go up randomly, they go down randomly. And we found over the years, it was very tough. If you just had a bar chart to see, should I be long? Should I be short? Where do I get in? What's this? And so there's a lot of question about an ambiguity about where to take trades. We like the fact that these bands give the markets form and structure, and we use that structure to trade. And most of it does center, a lot of it centers around the thick line in the middle, which is called the mid band. Yes. NASDAQ, we recommend a larger bar, Dave, because of the volatility. With a 4-range bar on NASDAQ, you would get a shotgunning of several hundred bars at a time because of the volatility and how quickly it moves up and down. We recommend a 12-range bar, even as much as a 14-range bar. We'll smooth it out, but you keep the range. You don't go to time-based bars. Don't go to 1 or 3 minutes, because you want to still see the swing levels. The range bars are what help give you the swing levels, where you can see where to get in and out when you're long and short. The time-based bars just don't do that. The VWAP is not the mid band. If you put a VWAP on this chart, Bargarv, it would look very different than that. It would be a line that would be somewhere else on the chart. So the bands are not a VWAP. No.
Yeah, and just real quick too, Charles didn't get a chance to show, which we will even in the after party for a few minutes. We'll show you, for instance, how we actually have a tool that you can see these swings in real time. You know, we teach a method called lightning, and you know, basically it's because there's zigzags on the charts, and we'll show you some of that.
Yeah. Yeah. Lightning is a really, really excellent tool. Gary will show that in that webinar in about an hour or so. But yeah, the VWAP, you know, there's pluses and minuses. We've looked at the VWAP before. One of the drawbacks of it is that when you get a rapidly moving market and it comes up here, let me go back to the trend change one. Where was it? Trend change one. Yeah. See, here's an example here. Now I don't have a VWAP on here, but the problem with the VWAP is there's a lot of folks that say long above the VWAP, short below the VWAP. Well, I mean, there's a lot of times where that VWAP in this example right here could be way down here. So while the market is selling off, one of the disadvantages that I've learned over the years with the VWAP is when it's far away from the actual price, let's say hypothetically it was down here somewhere on this chart, that when the market rolls over and you start wanting to take short trades, you're still trying to get long and you're just getting hammered. Yeah, you're just getting hammered because the market is selling off because it's trying to do a reversion to the VWAP mean. And so you're missing all the shorts and you're just getting slapped by still trying to get long. So we've kind of moved away from using the VWAP and stick with the indicators you see right here on the charts.
And one real quick, Adrian, on your question, our trading room is opened. Basically, when you get your email, it says 7:55 Central Time till 10 o'clock Central Time. So whatever time, you know, it is where you're in the country. And we're open 2 hours and about 5 to 10 minutes. So about 2 hours and 5 to 10 minutes every single day.
Yeah, we wrap up around 8 Pacific, 10 Central. And because in the first 2 hours, you really get most of the moves. In fact, truth be told, in the first 30 to 60 minutes, most of the trades are done. I mean, we stick around and we still call trades. I mean, here's an example. We got what? We got a 20 handle short on ES right out of the gate. Remember? We'll show that in the after party webinar. But basically in the first 30 to 60 minutes after that 6:30 Pacific open of the market, most of the trades are done in 30 to 60 minutes. In fact, a lot of our traders hit their goal in 30 to 60 minutes and then they leave the room. But we leave it open until 8 o'clock because that's what we do.
Yeah, and by the way, again, you know, trading is at your own sole discretion. So, you know, when we're actually diagnosing the charts and everything, it's entirely up to you if you want to actually, you know, take a trade and everything. And, you know, basically as far as results and things like that, that's going to be dependent on a person's trading skills. And we're going to teach you how to do it.
Yep.
But everybody has to start out and crawl first. You know, like babies, they have to crawl first, and then they, you know, after a while, they start knocking things down and start trying to stand up, and pretty soon they walk. And pretty soon they're running. And that's what traders do too. You know, you have to crawl before you walk and walk before you run.
Yep. Well, the good news is we're there to help you do it.
Absolutely. We're an educational service. We literally teach as we're calling trades in the room. We'll show you why we're getting in a particular trade in real time. And it's up to the individual if they want to take it.
Yep. Well, I think that might be a wrap. I don't see anything else here, Gary. Do you?
All right. 1 hour and 5 minutes from now, one lucky winner is going to win a big deal. We're talking about a lifetime subscription to Viper Trading Systems with all the indicators, the strategy, everything that we do, and everything we do from henceforth. It's a lifetime's everything. And that'll be given away in 1 hour and 5 minutes. And also be sure to come because somebody else is going to win something else. And Charles and I will be talking about that in a few minutes.
Sounds good.
All right,
Okay.
everyone.
We'll see you all in about an hour.
Hope you enjoyed it. We'll be back in an hour.
Thank you
Done.
both. Enjoy your holidays.
All right, Tiffany, good holidays to you. We'll see you later. Thank you.
See you later.
Bye now.